Price data for August was published today by CoreLogic, and it demonstrates that housing markets generally remain solid across Australia. The CoreLogic figures for August show that house prices dropped in only 2 of the 8 capital cities during the month. Prices rose in Canberra, Hobart and Darwin, and they were unchanged in Brisbane, Adelaide and Perth. House prices also rose during August in the regional areas of New South Wales, Queensland and Tasmania. Sydney and Melbourne were the only capital cities to record decreases in their house prices during the month. And overall, nationally, the average across the country was a fall of 0.4%, dragged down by the negative results in the 2 biggest cities, but it was a small increase during August in the regional areas. In the year to date, house prices remain about 1% higher than the start of 2020, helped by a 2.3% increase in regional Australia. House prices remain higher than at the start of the year in Sydney, Brisbane, Adelaide, Canberra, Hobart and Darwin, as well as in the regional areas of New South Wales, Victoria, Queensland, South Australia and Tasmania. In other words, almost everywhere. Apartment prices are up nationally about 1% in the year to date, boosted by a 2.1% rise in regional Australia and a smaller increase in the combined capital cities. Now, the Housing Industry Association Housing Affordability Index for the June quarter shows housing in Australia is at its most affordable since 1999. That index is calculated for each of the 8 capital cities and the regional areas on a quarterly basis and takes into account the latest dwelling prices, mortgage interest rates and wage developments. Housing affordability improved in the June quarter across all capital cities. This improvement in affordability means that it now requires less than 1.2 average incomes to service a mortgage on a medium price dwelling in Australia's capital cities. This is a major improvement from 3 years ago when it required more than 1.4 times the average income to service that same mortgage. The combination of lower interest rates, slow house price growth and relatively steady wage growth over the past 3 years have driven this improvement in affordability. Now, not unrelated to that, first home buyers have been snapping up properties with less than $30,000 saved under the federal government scheme, which allows them to buy with just a 5% deposit without paying mortgage insurance, and that's according to figures published this week. Medium deposit sizes across Australia were as low as $15,500 for first home buyers in Tasmania, with young buyers using the federal government's first home loan deposit scheme to get into the market in the first half of 2020 without having to pay mortgage insurance. Over the first 6 months of the scheme, which was open to 10,000 first home buyers also in Queensland, South Australia, Western Australia and Northern Territory also used the government guarantee to purchase a property with a median deposit of $20,000 or less. In the more expensive market, savings for first home buyers climbed to a deposit of about $24,000 in Canberra and $29,000 in both New South Wales and Victoria, but scheme participants were still able to buy 4 years earlier than originally planned, according to the National Housing Finance and Investment Corporation. About 3/4 of the guaranteed loans were taken up by Australians aged between 18 and 34, the smaller number of first home buyers aged over 40. Now, one of the key factors keeping prices solid is the absence of major supply in the market, and this is likely to be exacerbated by a significant decline in the construction of new apartments in the next few years. New reports suggest that apartment supply will dry up over the next 3 years as building completions drop from their present levels in Sydney by 81% and in Melbourne by 75%. As projects are delayed or cancelled because of the pandemic slowdown. The State of the Market for Residential Apartments report for the first half of 2020 by consultancy firm Charter Keck Kramer also expects a decline in the number of completed apartments in Brisbane, where supply is forecast to drop about 90% by the year 2023. Charter Keck Kramer, Director of Residential Research, Angie Zigomanis, said the expected drop in apartment completions will help prevent apartment prices and rents from falling. Zigomanis says the apartment market could see a relief from lower supply and starts, which will place upward pressure on rents, yields and prices, and in turn should kick-start off the planned demand. He says if a quick recovery in net overseas migration to pre-COVID levels occurs, the sharp reduction in new dwelling completions is likely to cause a significant dwelling deficiency to re-emerge, and that will put upward pressure on prices. Now, Australians living abroad are starting to return home amid the pandemic, with real estate agents reporting a surge in expat inquiry. Australians based in the United Kingdom, Singapore, Hong Kong and the United States are leading inquiry, particularly into beachside and hinterland real estate. For example, Harcourt's coastal agent on the Gold Coast, Katrina Walsh, says she has been fielding numerous calls from expats looking for anything ocean or green on the Gold Coast. She says, I'm hearing from expats in Hong Kong, Singapore, Dubai and London, as well as people who have just come back from overseas. Cashed up expats are wanting to put their money into Gold Coast property, but they want it to be waterfront, beachfront or on big acreages. Now, search data from realestate.com.au from the past 90 days revealed that house hunters in New Zealand accounted for 27% of views on residential real estate in Queensland, followed by 20% from the United Kingdom and 12% from the United States. And around 4% of searches are coming out of Hong Kong and Canada. And of those searches, the Gold Coast is the top region of choice in Queensland, followed by Brisbane, the Sunshine Coast, Cairns and then Townsville. Now, as I have commented frequently in recent weeks, house prices in regional areas have held steady against the economic headwinds, buoyed by demand for a beach or country lifestyle. Prices outside the capital cities were overall unchanged between March and July, according to research from CoreLogic. In the capital cities, prices overall were down about 2% on average over that same period, but they didn't fall overall in the regional areas, and this is showing up in price data repeatedly, that regional Australia is doing well and generally better than the capital cities. Some regional cities are actually recording solid to strong price growth, including places like Ballarat and Bendigo in Victoria, Orange in New South Wales, the Sunshine Coast in Queensland. Partly, at least, this has been driven by this, what I see as the strongest trend in Australian real estate, the trend I call the exodus to affordable lifestyle. This has been underway for some time, driven by technology, which allows people to work remotely, and by improved transport links as well. The pandemic, with its enforced lockdowns, has enhanced that trend. Regional Australia overall provides, I think, excellent opportunities right now for investors. Most regional cities and towns are unaffected by the pandemic, and many have local economies which are well set up to withstand any negative forces from the pandemic. So it's largely business as usual, with the notable exception of the closed interstate borders. Vacancies in most locations are low, indeed very low in many cases, and rents are rising. There is good demand from buyers and there's limited supply of properties for sale, so there is upward pressure on prices. And this is really, I think, the biggest real estate story of the year to date, and I think it's likely to remain so. Bye for now.